Right now. The money in your bank account probably isn't there. Not in the way you think. Not in a vault. Not in a digital drawer with your name on it. In fact, if everyone tried to withdraw their deposits tomorrow, the global banking system would collapse before lunch. And yet, it works. Most days. Barely. Tonight, we're going inside the trillion-dollar shadow system behind everyday bank deposits, the one that quietly powers the modern economy, and occasionally almost destroys it. Set up. 0.35 to 110. Most people think banks store money. They don't. Banks manufacture money. And your deposit isn't really your money anymore. It's the bank's liability, a promise to pay you later. That difference sounds small. It isn't. It's the foundation of the entire global financial system. And it explains why governments panic during banking crises, why bailouts happen, and why your savings are connected to markets you've never heard of. This isn't about corruption or conspiracy. It's about math. Incentives. And a system that only works if nobody looks at it too closely, or all at once. How the system actually works, 110 to 240. Let's start simple. You deposit $1,000 into your bank. You imagine it sits there, untouched. But the bank immediately lends most of it out. Maybe $900 goes to a mortgage. That borrower spends it. The seller deposits it. That bank lends most of it again. Same money. Multiple claims. After a few rounds, your original $1,000 has turned into nearly $10,000 of deposits across the system. Not counterfeit. Not illegal. Perfectly normal. This is called fractional reserve banking, but that name hides what's really happening. Banks aren't intermediaries. They're money factories. Every loan creates new deposits out of thin air, backed not by cash, but by the assumption that not everyone will ask for their money at the same time. And historically, they don't. Until they do. The shadow layer. Now here's where it gets weird. Traditional banks aren't.